How's it going there, aspiring forex trader? I just want to give you a big shout out. How's it going there, trader? Welcome back to this module of our entry and exit. How's it going, forex trader? Welcome back to this module of how's it going, forex? How's it going, forex trader? Trust you've actually digested the previous module and you've actually made good use of it. Yeah. So this particular one is the. Alright, so now onto this module that has to speak with the. Alright, so now onto this module that has to do with the entries and exits. Like I said, like I always say, I have actually gone ahead to break down trading into two different aspects. We'll have the technical analysis and then we have the trade execution. So right about now, we're starting to dive right into the entries and then exit strategy as we look to round it up. Alright, so now to kick things off nicely, we have euro dollar here before us, and as I said to you guys earlier on, plotting your levels, marking out your chart patterns, understanding how all these things work, always go in line. Yeah, so I think I'll still make more videos, always go in line. All right, so now when we want to talk about entry, so let's see what we can actually do with the entry. All right, so again, you have a level from here to here. All right, so let's take for instance now this is a level from here. You just go ahead and clone this guy nicely and bring this guy up to this point. All right, so let's say for instance that this is our entry point. Say you want to enter from here. Now depending on the kind of pair and then the kind of market pullback you have, we have different kind of entry strategies that we have. So we have the entry, the counter trend line entry, and then we have the bounce method entry. Right, so and then we also have the breakout and then retest of the counter trend line entry. So these things will be we taught you properly here. All right, so now to kick things off here, we have the euro dollar to the outside. Now you know that the market actually loves to move from one level to the next level, as you can see, like so. And once you break out of one level, we tend to trend to the opposite direction. That is, if we do break out of here and then test it out nicely, that is to say, once we do break a level like so and balance out nicely, we tend to point to the upside. Yeah, so if we break this level here, we're actually running all the way to this other level. It's as easy as that. Yeah, now coming on to this, so this is the daily time frame. Now let me just take you guys through the monthly time frame again. All right, so if you look closely. All right, so this is the daily time frame, as I said earlier. So if you look closely, you can see that we actually broke out of here and then came out to balance out nicely somewhere around here like so. So depending on the kind of pullbacks you have, you are actually free to use either a counter trend line or a bounce method. Right now, in this case, yeah, you may not necessarily use a counter trend line because the market did not actually start coiling up for me. It just dropped out of the sky and then next thing started to range nicely here. So even if you're choosing a counter trend line, your stop losses will be way too big. And I just want to show you guys how to do this. So whenever you come on here and then you see something like this, yeah, now this is a range play. Best believe this is a range where you have the market fall out of the sky and then it fails to give you any new high or any new low. You just have like a range market here where you have the market bounce like this. It gives you consistent highs and it's like, so where you have the market come here and then bounce at this low, give you the same high, same low, the same high. What you need to do is just come and box this guy out nicely. All right, from here, from this top here all the way to this point, because what tends to happen is the market could easily use it as a supply level here, as it drop here, pull back and then drop further. This is exactly what happened. By the way, I'll teach you guys supply and demand in a subsequent model. So from here to here, this is where you want to mark this guy out nicely. Then you say to yourself, find you have actually broken structure to the downside, you have actually hit base. Yeah, so if at all this market is going to continue higher, it has to break out of this range. The moment you find yourself in a situation like this where you have the market just calling up nicely like so, best believe best believe especially when you stop to make series of higher highs and higher lows, and if you've actually broken out of here and they're starting to point to the upside, you know that what you want to look out for is buying opportunities and the market is still stuck in this range. What you need to do is box it up nicely. You have the what you have here is the lower bottom and then the upper bottom. So whenever you're in a situation like this and then you find the market just break back down into a range, best believe that this is a range here. All right, the range started from here precisely. This is a range. So for some this is a range. All right. So then for some reason this is a range here. Like this is the range here, right? This is the box. Then for some reason the market seems to have broken back down in here because technically speaking, according to what Fibonacci, this is the range area, and then we had the market spike above and then melt all the way back down. Now, according to price action, technically speaking, according to what Fibonacci says, yeah, this ought to be a breakout retest continuation to the upside. That is to say, the market ought to have come on here like so, okay, giving you a pullback here, balance out nicely, and then continue from here. However, that did not exactly happen. Instead, the market actually dipped even further back down below this range here, and this here would be an issue for you. So what you do is very, very simple. Whenever you're faced in a situation like that, just simply box up the market like so. Just box it up the market, just box up the market, and then allow the market do whatever thing it has to do here. If it's gonna go higher, it has to break out of here. If it's gonna continue lower, it has to break out of here. Do you understand? So now, as you can see clearly, the market did actually break out of here, then pull back. So on this pullback is where you want to enter. So now, those of you guys watching this, I don't like to make my entries on the daily time frame. Make my entries on the 4-hour time frame. Yeah, entries on the 4-hour time frame, please. So marking out this guy like so. Let's just mark this guy up properly. All right. So this is the high. All right. So let's scroll down to the 4-hour time frame and see how things look. All right. So this is what the 4-hour time frame looks like. Yeah, pretty clean, pretty decent, as you can see like so. So we were initially in this box. Best believe you could have easily gone short here and made tons of money. Again, I'll show you guys how to trade supply and demand in our subscription models. But as this stands here, from here to here, this is where you want to be gunning for. Yeah, so where do you actually make your entry and how do you actually proceed to do this? Now, key thing is, once the market breaks out of the range, it has to give you like a force pullback here. This was a force pullback here. So in this case here, the demand level was created somewhere around here like so. This is that demand level that you want to play with. Yeah, so demand level was actually created here. Now this will not be the best Fibonacci play because I mean, if you plot your fibs from swing low all the way to swing high, it most likely will not make any sense. Even came into the 0.5 region. I don't really like the 0.5. I like to see market at the 0.6 region. Yeah, but nonetheless, this actually tapped into the 0.5 region. And now in this market situation now, where the market did not actually give you a decent pullback, like it didn't give you any wavy pattern. It just came on here and then just gave you a supply level drop and then just started to thin on here. Use what we call the rally base rally, in the sense that this is a rally from here to here, rally base here, rally. So on the follow through, like on the pullback rather, the pullback of this place here, this is exactly where you want to go in. Yeah, so because this was where the market first of all created that demand level, somewhere around here. Actually, let me just make it precisely where it is. Just give me a second. All right, so for this demand level here, this is exactly where it is. This is where that demand level was, because this was where the market bolted out of here. So this was the rally base rally, then the pullback into there. So what you want to be looking out for is a pullback into that recent low, which this candlestick bolted out of. Yeah, so you really want to monitor this in the market. It happens like so many times. Once the market breaks out of there, and then gives you that first reaction, which is this bolt here. This is the second pullback somewhere around here. Then upon candlestick rejection here, so you need to wait and look at how the market reacts off of there. Does it actually reject? Once you see rejection 1 and 2, you can now enter. And alternatively, you can actually use the counter trend line here. Let me show you something real quick. So you can actually go ahead and use your counter trend line like so. Yeah, just come on here and plot it out nicely. You say to yourself, okay, fine. Once this market breaks out of this, can I do once the market breaks out of this counter trend line here, entries will be made here, stops will be below structure. And please always put your stop losses below structure. I cannot stress this enough. Like, you do not really want to put your trades here and then put your stops inside of here. You get stopped out eventually. Yeah, so always put your stop loss where they ought to be. So in this case here, this would be a decent one from here to here, like so. Decent entry here. Actually, hold on, let me just bring out the right way for that. So decent entry for long, and stops will go above below structure rather, and then you're targeting all the way at this high. Remember, this is your prime target here. All right, remember from the recent high. Yeah, that's exactly where you want to be targeting. Obviously, again, according to the Fibonacci theory, you ought to always take out some of your positions at the 100% retracement point. Yeah. Again, so according so again so according to the so again according to the so again according to the So again, according to the Fibonacci theory, you also always take out 100% or at least 50% of your profit at the 100% retracement point. In this case, if you plot your fib like so from the most recent swing low all the way to the swing high, you can clearly see that the reversal point of this market was at the 100% point here. So if your entries were somewhere around here, then stocks were below structure here, you must always take out at least 50% of your money here and then move somebody to past break even. Yeah, that's exactly how you want to do this market, and you can see that this serves as an helmet. All right, so you can easily enter here and then stocks will come below structure and then right get to the upside. That is the first entry, strategy that you have to play with, and then also you can scale in subsequently as market goes in your favor. Yeah. Now let's use a different entry strategy like the so because it's not in every case that you have the market coil up nicely like that. For you, most cases you have something called a bullish engulfing candlestick pattern. All right, so let's see how that looks on the weekly time frame first of all, or maybe on the day time frame. Let me see if I have any of that criteria, because there are several times where I've had to use that entry method. Okay, so we had another counter trend line break here. You can see for a fact again, after the market broke out of this range. Remember the range we had here earlier. The market came back into the range again, and after it broke out of that range, it gave us a bullish engulfing candlestick here, and then a pullback somewhere around here. So upon this pullback here, once you get a decent, let me scroll down to the 4 hour time frame and see how this will look properly, so I can explain it properly for you. So I really like to make my entries on the 4 hour time frame. I'm not really a big fan of the daily time frame entries because the stop loss is going to be a bit wider than usual. I like to make entries on the 4 hour time frame. So now on this particular entry, you do not have the luxury of using a counter trend line as much because the pullback is not as it's too steep here. So what you want to do is, you've seen this is where you want to go long from here. This was the breakout. This is a Fibonacci play here. By the way, it is from the most recent low all the way, swing low rather, all the way to this point here. So this is where you're looking to go long here. So now what you do is very, very simple. You can see that the market is actually starting to thin out here. It dropped and then started to give a series of lower lows and lower highs, lower lows and lower highs. Then we got here, we put in so we got here, we put in a lower low and then some form of a lower high and then put it in a higher low somewhere around here like so. So what you say to yourself, you say, okay, fine, I've seen the base, this has practically bottomed out, and then this is like a sort of liquidity. So upon the market pointing bullish, which is somewhere around here, this is where you want to enter from here. Ideally you could enter from here, from this candle, but you want to see a convincing bullish engulfing candle, particularly on the 4 hour time frame. Now in this case here, it is not there, but once you scale back up to the daily time frame here, let me just show you guys again. I'm just trying to explain something for you. All right, so entry is for this kind of pullback here, you would most likely want to enter on the daily time frame. I would advise you enter on the daily time frame. Anytime you see the market drop like this and then starts to create this arc here, so it's, how do I explain this to make any sense? So it looks like this. So anytime you're in a trade or you're waiting for a pullback and then you see the market come on the pullback and then give you some form of an arc like this, where you have like this is the lowest point here, the market starts to give you higher lows somewhere around here. You make your entries at this candlestick here. This is the one, because now this is an entry candlestick pattern. Yeah. So if you're looking to buy, yeah, this is exactly where you want to enter from. So entries will be somewhere around here like so. Let me just show you guys something real quick. So this in this case is a morning star here. So this is a morning star candlestick pattern here, where you have the drop, you have the indecision candle, then followed by a bullish candle rather. So I take it again. So this is an indecision candle here. This is a doji, yeah. So this is a morning star practically. The kind of pullback where you have, and this usually signals reversal, guys. This is, so in this case it is a reversal of this drop here. So now this usually signals reversal, and in this case it is a reversal of this drop here. That means the market wants to go higher. So what you want to do is you want to start looking for buying of opportunities. So how you actually make use of this candlestick pattern is like this. You have broken out of here, you're waiting for a pullback here. So after the pullback, so after this pullback at this point here, you watch closely to see how the market reacts to this level, which is of course where the market reversed from in recent times. Yeah, so you want to watch it out nicely. Now I don't like to use horizontal rays for my levels. I like to use actual levels. So just in case you're watching this, let me just use this properly. So this is what it ought to look like here. So this is your level that got broken here, broken out significantly. Then this is the pullback here. So if you're entering this trade, obviously on the bullish close of this morning star, this is exactly where you want to enter this trade. You don't enter here, because the market will easily continue lower. And on the formation of this doji candle is not, this is not enough so this doji candle is not enough confirmation for you to go long here. It is actually when the market has come in to put in a bullish candle. This is it here. So this drop balance out nicely, then a bullish candle. So this is when it starts to point to the upside. This is exactly when you want to go in. All right. So it looks something like this. Entries are here, and then stops are somewhere around here, just a few video structure. Then you're targeting for again the recent high, which is all the way up here. So this is a nice 1:2 risk to reward here, as you can see. So this is a nice so this is a nice 1:2 risk to reward here, as you can see. Like, so very simple. It works like crazy, and I always would urge you guys to actually go ahead and practice these things as many times as possible. Yeah. So this is the morning star entry strategy, and in most cases, yeah, you don't always have like the clearness of the doji here. It might just be one single very tiny candle. In whatever case here, this bullish candle formation must be bigger, and it must engulf this middle one here. All right, it must always engulf the doji. So once it engulfs here, this is where you make your entry, and it must occur according to the trend. Now you can see that the trend here is actually bullish according to what this current structure is showing us here. This is actually bullish here. So this is a low, this is a high, higher low, higher high, higher low here. So higher low formation here. So this must always go according to trend. So, and you can see closely here that this is so you can see clearly so you can see clearly that this is happening in accordance with the trend. So this is a low, this is a higher low somewhere around here. And technically speaking, if the market is going to go high, it must at least come and give you at least an equal high or a higher high. In this case, it came on here and then gave us a higher low. So technically speaking, going long here is actually very, very good. Again, entries will be here, stops below structure, right? This guy all the way to the upside. That's just that for a buying scenario. Yeah, a buying scenario. So let me see what other selling scenario that we can have for you. Okay, so now this is a sell trade here. Okay, so now on one hand we've had like a dodgy, a morning star entry criteria, and then because this market did not exactly give us the best wave pattern. The market did not even give us, so because this market did not exactly give us, so because this market did not exactly give us the best pullback pattern, it just gave us a drop from the sky. All right, because this market did not exactly give us a very good pullback. It just fell out of the sky, and it is very difficult to draw a counter trend like this, because this trend is too steep. You want the market to coil up nicely so you can use your counter trend line. Now, in the event that you cannot use your counter trend line, you use something called the bounce method. This is the bounce method here, where you have the market just pull back nicely, balance out, and then bounce off of there. So it's usually a morning star entry or a bullish daily engulfing candlestick for a buying scenario. Now, again, on this other hand here, we have had a very beautiful wavy pattern here where the market has coiled up nicely. It has actually coiled up nicely. So let me see, extend this guy here. Okay, so this is exactly how it looks. So you can see that from here, from this top all the way to this bottom here, the market actually gave us a series of lower highs and lower lows, lower highs and lower lows. So this is even enough for us to actually put our counter trend lines in. So what you do is very simple. Come again, throw this guy nicely like so. So you're going to start from here. So you can start from here, you can start from here, depending on how conservative you want to be. But I will start from here. All right, connect this guy all the way to the outer point. Now in this case, I will not come and plug my trend line like this. No, I'll connect it to the outermost point of this pullback here, which happens to be somewhere around here like so. So you can see how it looks. Okay, hold on. So you can see how it looks here. First touch, second touch, breakout here. So on this breakout, I don't enter here. I don't enter here. Best believe if someone had entered here, it would have made maybe some few extra pips here and there. But I like to use the best confirmations in the game. Yeah. So I'll actually enter somewhere around here. So I'll go long somewhere around here, like so, long here, and then stops below structure, yeah, as you see, and I target this. So now in this case here, I can clearly see. Now I'm just using this to explain entry and exit for you guys. When we actually talk about trend proper, I'll talk to you guys about all these things. So if you look closely, this is the supply level. So best believe I'll not be looking to go all the way up here. I'll just go on for the best that market has to offer, which is somewhere around from here to here. All right, so this is just your this so this is just how you can actually make your entries. Yeah. Now on the south side here, on the south side of things here, flipping the tables. Hold on, let me just get this. All right. So for the south side of things here, taking this guy higher. So now according to the trend, now this is, let's talk about trend now. So this is a high, this is a lower high, because this high is lower than this previous one, and then this is a lower high here. So you really want to go short here. This is where you want to go short from, because market came and created a supply level and then dropped significantly. So on the follow through, rather on the pullback here, is where you want to go in and short this guy. Yeah. So again, getting rid of this guy here, we have on our hands a very beautiful. So we have on our hands a very, very beautiful supply level somewhere around here, like so. So what you want to do is go and mark it out nicely. Once again, I'll teach you how to mark it out in subsequent videos. So this is just about supply, and so please close that door. So this is just about entries and exits. Yeah. So as you can see, like so, the market came on here, collapsed nicely, then dropped again, then pull back. So in this case, you can easily use your Fibonacci from swing high all the way to swing low, somewhere around here, like so. So now this swing low, you want to go ahead and mark it out nicely, because this is where you want to close out the trades. All right. So this is your take profit point here as far as this move is concerned. So that's just that so Fibonacci is now out of the way. So next thing you do now is very, very simple. Come on here now. Since the market has given you a nice pullback here, beautiful pullback, so you can actually go down to the 4-hour time frame, yeah, and see how it looks over there. Alright, so let's extend this nicely. So this is how the market looks on the 4-hour time frame. So you come on here again from this very low point here, connect it and draw your counter trend line, like so. Guys, I don't care where this breakout happened, just connect it the way it ought to be. So once you're making your entries will have to be at the break of the counter trend line. You see now the market broke out and then went back to retest the trend line, but believe me, most times when the market breaks trend line, it doesn't always come back. This is just one of those cases, and this is why I am still hitting on the fact that you have to put your stop losses above structure. You do not have a breakout of counter trend line, you make entries here and then put your stops in here, you just get blown. All right, you just get blown. So you also want to go ahead and then minimize this guy as possible. That's another thing. Then come on here. I think this is my short tool. Short this guy here. All right, short this guy here, like so. Let me see. I hope that's the one I chose. All right, so place it there nicely, and then put your stop losses above structure. No matter what happens, guys, above structure, because at the end of the day, the market could easily come. You see now, if you had plotted or placed your stop losses somewhere around inside of here now, the market would have easily come in and then taken you out. You feel me? But for the fact that you place it above structure, the market can do every single thing you want to do. Your stops are safe, your trades are safe, and you allow this guy melt all the way to the downside, like so. Easy. All right. Now this isn't the whole profit that there is to make in this market. The market could easily even dip lower, as you can see, like so, even went even lower. So in most cases here, what I always advise. So in most cases here, what I always advise people do is just take out some money here. All right. So this is exactly where you want to lock in some profit. And again, it is And again, the risk to reward doesn't always matter as whether or not the trade is a winning trade. Yeah, what matters to you is whether or not the trade is a winning trade, not the risk to reward. Believe me, if this market is the 1:1.5 and you risk a normal 30% on this guy, you're making a decent 30.5% back. Compared to someone who tried to put the stop losses here, you just get blown. All right, so put your stop losses where they need to be. All right, then allow the market work in your favor. See, so I had like a minor breakout retest continuation here. So again, you head onto your trades, and then you hit TP. And once it hits this place, this CP, you really want to take out some money and then allow some profits some trades to run on break even. That's just the 100 trade. Yeah. Once you hit 100% retracement point here, which was somewhere around here from swing high rather, all the way to swing low here, you want to lock out some money and allow the market move in whatever direction it wants to move in. All right. So in any case here, this market has actually gone ahead. So whatever happens, this market has actually gone ahead to make you some money, and you're not entirely stressed about it because I mean you've made some money, and whatever thing the market wants to do, you can actually go ahead and do. All right, so this is just how you trade conservatively. You don't have to, put in some ridiculous lot sizes. Yeah. So this is exactly how you do it for entry and exit for the first strategy. So on the second strategy, all right. So that's exactly how you do for entries and exits. It's very, very simple. All you have to do is study the patterns, they repeat themselves over and over and over again in the market. So let's see if we have another example that we can actually talk about. Okay, so the market practically bounced in and out of this range here, just ranging here, buy here, buy here. So just playing around here. So yeah, so that's just that for the entry and exit. I think I'll speak more about this in depth in our subsequent models where I'll take you guys deeply into the entry and exit proper, then teach you guys different strategies and how to count your waves and know what the market is doing for a very significant pullback here. So that's just that for this first model of entry and exit.